Hi guys, welcome back to Father and Son Investing. This is my second attempt at this video. I had a lightning strike yesterday that took out my video when it was almost done. I'm excited to talk about this one. I want to talk about six Vanguard funds that I am buying or am keeping a close eye on right now because I think that they are in bargain territory or soon will be. So if you're not familiar with Vanguard, let's just give you a quick summary. Vanguard was founded by Jack Bogle. I have another video that actually talks about that, so you can watch that. But Vanguard essentially is owned by the people who buy their funds. So if you buy a Vanguard fund, you are essentially an owner. Now, what does that do for you? Vanguard says that it keeps their interests aligned with your interests because there's no conflicting loyalties for them. Similarly, they can act with greater conviction on investment themes that are important to you. They can maintain a long-term perspective here because they don't have to worry about quarterly results. And this is probably the biggest reason why people turn to Vanguard. They can maintain incredibly low costs. One of the reasons why I have some of my investing in Vanguard. Now, there may be some people watching this who aren't familiar with what an ETF is, so I'm going to spend 30 seconds touching on this before we get to the 6 funds that I am buying or have closely on my watch list. So ETF stands for Exchange Traded Fund. What you need to know is that it's kind of between an individual stock and a mutual fund. It is a fund made up of individual stocks similar to a mutual fund, but it doesn't trade like a mutual fund, it trades like a stock. Another way to think of this is like a bouquet. Think of the mutual fund as the bouquet and the individual stocks within it as the flowers as part of a bouquet. So a tech fund might have Alphabet and Facebook and Amazon and Apple plus 100 other tech stocks. You combine all those together and you can buy it as a single stock-like entity called an exchange traded fund or ETF. That's the quick 30-second explanation. All right, let's get to the 6 funds that I am buying or interested in closely watching. Now, what you see before you here is a list of all of the United States Vanguard's ETFs. So this doesn't have any of their ETFs that deal with funds of stocks outside of the United States. The ones that are in yellow are actual ETFs that I own from Vanguard. What I realized as I did this is that I own way too many ETFs from Vanguard. I probably need to narrow this down a little bit because I have seen that it's difficult for me to keep track of all of these and when I should be selling. Nevertheless, I want to use this spreadsheet here to define how I came about choosing these 6 ETFs that I am either buying more of or closely watching. One of the factors that I looked at is how far down is something on the year. Now, that's not the lone factor. For instance, I'm not running out to buy extended duration treasury ETF at the moment, even though it's down almost 30% for the year. However, one of these that comes in a close second for how far down for the year it is, I am very interested in buying, and that is the Vanguard Consumer Discretionary ETF. So that is one factor. How much of a sale is it right now? Another factor that went into my decision was how relatively stable are these ETFs? Meaning they might not have super high highs, but hopefully they don't have super low lows either. So another one that I'm looking at is the VDC Vanguard Consumer Staples ETF. A cousin to that one, although I'm not buying more of it yet, is the Vanguard Utilities ETF. If we look at both of these, we'll see that they don't have super high highs in terms of return, but they also aren't falling off a cliff when it comes to their decrease year to date. Another factor that I looked at is the fund flow. Now, what am I talking about there? It's the net flow of money into or out of a fund at any given time. If we look at this year to date, we'll see that the S&P 500 fund is leading the inflows by far more than any other fund that Vanguard has. Interesting, since the S&P 500 is down so far. Why is that I think? I think it's because the S&P 500, of course, is the standard for investing, and that's where people want to park their money. Why am I interested in the outflows? Because if money is flowing out of a fund, that's going to mean that the price of this fund is coming down, relatively on sale potentially. So one of the funds that I chose here was Vanguard Communication Services ETF VOX. Lastly, I want to look at some of the fundamentals here. Certainly one of the fundamentals is what kind of dividend is a fund paying. People are very interested in dividends right now as inflation and interest rates have gone up. So one of the ones that I am interested in here and have purchased in the past is VNQ, the Vanguard Real Estate ETF. This is one that's going to be on my watch list. I'm not quite ready to buy yet, but we'll talk about that in a minute. So without further ado, let's go ahead and get to my list of the 6 Vanguard funds that I'm buying or have on my watch list to buy imminently. The first one that I want to talk about is VOO, the Vanguard S&P 500 ETF. The expense ratio on this is incredibly low. You're looking at 0.03%. So if you invest $10,000, you're going to pay Vanguard $3 to manage that for you. If you're not familiar with the S&P 500, it's made up of the 500 largest companies in the United States, and this particular index is market cap weighted, meaning that companies who have the largest market cap, that essentially is taking the number of shares and multiplying it by the current share price, those companies will make up a larger portion of the S&P 500 index than companies who have smaller market caps, such that you'll see that the top 10 companies, which are listed for you down here, make up almost 27% of this particular bouquet of stocks. Now, because of that, although it is diversified, you will see that there is some concentration here in the technology sector. You're looking at 30% essentially of this will be technology. So keep that in mind if you're buying the S&P 500 and you're thinking that you might want to diversify a little more than that. Now, I said earlier that the S&P 500 is the standard essentially for investing, at least in the United States. And one of the reasons for that, I think, is that it tends to always go up. Now, there are moments where it's going down, but if you look at it over the long run, your money will be increasing, your wealth will be increasing, or at least it has been, and I expect that it will continue to be that way. So is $350 per share a good price? Well, it's certainly not as great as it was back here during that big market crash early in the pandemic when it was 204, but it's certainly at a nice bargain compared to what it was here when it was running at $430 per share. All right, that one was the no-brainer. Let's move on to ones that might require a little bit more thought. Now, VGT, Vanguard Information Technology ETF. Why am I interested in this one? Is it a great price? Well, no, it's certainly not as great as it was here, again, on that market crash during the pandemic when it was down below $200 per share. But I think that this is one that, again, in the long run is going to continue to go up, similar to what the S&P 500 has been doing, and you can get a nice feel here for just how much that has come down off its high. Now, know that if you choose to invest in this, you're really going to be doubling up on the technology. Of course, it's a technology ETF, and you're looking at a lot of the same companies that you'll see in the S&P 500, Apple, Microsoft, NVIDIA. But what this one does allow you to do is just concentrate heavily on technology if that's what you're interested in. Now, I want to highlight again Vanguard's incredibly low fees, and the expense ratio on this is 0.1%, so you will spend $10 per $10,000 that you invest for them to manage this fund for you. Now, I mentioned earlier VNQ, Vanguard Real Estate ETF. I do own shares of this. I'm not quite ready to buy this one yet, although it is on my watch closely list, because I'm really looking for it down in the $80-ish, $80 to $85 range. Now, here is a fund that is a little bit more stable. We'll see that if we go back to 2007, it was running at about $84 per share. It's not that much off of that now, $91 per share. So this is one that you could look at for stability. Well, if it's only going to give you stability, why would you be interested in this one? Well, it does pay a dividend. Right now, that dividend is about 2.8%. And if we look here at its track record, we see that annualized, it's about 7.5% per year, less than the S&P 500, but still just a nice, solid, continuous return. If you look at it over the last year, you've lost 7%, which is still less than what the market has been losing recently. If you look at it year to date, it's down 19%, which is less than some of these other funds that we have looked at that were down more like 25 to almost 30%. So I'm not ready to buy this one quite yet, but the expense ratio is great, 0.12%, $12 per $10,000 you invest. Next, I want to talk about the one that I mentioned that had the outflows going on. That is Vanguard Communication Services ETF. The Vanguard Communication Services ETF is down to $95.27 per share, and that is significantly off its high of almost $150 per share in September of last year. Now, not only is it down year to date, but this is one of the funds that I highlighted that has significant fund outflows going on, so maybe that indicates that there might be some bargain shopping that can go on here. If you choose to buy this one, realize that you are going to be investing in technology. Again, it's about 45% of the fund, and you're going to get some duplication, but you're also going to get other companies here that you don't necessarily get in these quantities from other funds. You're looking at Meta and Alphabet, of course, but you're also going to be getting Verizon and Disney and AT&T and Comcast. A lot of these companies are incredibly down year to date for the year. Meta Platforms is down about 50%. Netflix is certainly well off its high. Disney is down below $100 per share now. That's what it was back during that little brief market drop in the spring of 2020. This one also does pay a little bit of a dividend. They're saying 1.2% right now at the current market price. And if you're looking at the expense ratio, again, you're looking at $10 per 10,000, so incredibly cheap. All right, let's wrap up this discussion with two more ETFs, and both of those are going to be consumer related. First, we'll talk about Vanguard Consumer Staples ETF. If you're not familiar with what consumer staples are, what you're looking at is products that people deem as essential and they would buy even when money is tight. You're looking at things like food and beverages, household goods, hygiene products. They throw in alcohol and tobacco. That one's up to debate a little bit to me. But these goods are products that people are unable or unwilling to cut off out of their budgets regardless of their financial situation. Because of that, this can be one of those funds that can provide you relative stability. We'll see that year to date, it's only down 5.4%. And if we look out at its track record, over the last 10 years, it annualized is 10.5%. So this is one that will get you a decent return. The highs are not tremendously high, but the lows are not tremendously low. You'll also get some dividend out of this one. It's 2.27% currently. And the expense ratio, you guessed it, 0.1%, $10 per $10,000. The last fund that I'm interested in here is Vanguard Consumer Discretionary ETF, discretionary being the key word there. If you're not familiar with that category, we're talking about goods and services that are considered non-essential by consumers, but desirable if their available income is sufficient to purchase them. So you're looking at things like durable goods, high-end apparel, entertainment, leisure activities, and automobiles. Now this one is on my watch list. I'm not quite ready to buy it here yet. Even though it's down 30% for the year and well off its highs from the fall of last year, there is talk of the United States entering a recession sometime in the next 6 months, and I expect to see that this particular ETF will go down quite a bit more. I'm looking for it to be down 40 to 50% on the year at some point, and that's really when I'm going to be very interested in this one. You can probably guess its expense ratio, 0.1%, and it does have a little bit of a dividend right now. It's 1.3%. So that is it for the 6 Vanguard funds that I am buying or am interested in closely watching. If you have funds that you are buying or interested in closely watching, feel free to leave a comment and let's see if we can have a little bit of a discussion and help other people out in what might be a bargain right now. Please share this information with a young person in your life. Get them investing. That is one way to change their future. And as always, until next time, enjoy your investing.